What's going on, YouTube? Happy Friday. I got the Bloughton Man thing going on. Black Mountain Man. Forehead looks really big on camera. Goodness gracious. But look, I mean, ignore that. I come to give you guys some stock market update news. Friday, the market went up. Dow Jones, S&P, and the NASDAQ had the strongest week since August. That's positive news. So it was basically a solid week overall for investors. That's good news. That's good news. That's good news for people in the market. If you're watching this, it's good news for you and I. So set yourselves up for what's to come, because this is going to be nice. This is going to be nice for what's going to happen. It's going to be a lot of money printing, a lot of inflation, but if you have hard assets like gold and silver, property, paper assets, anything of that nature, you'll be safe and you'll be shielded from all this inflation that's going to happen. You'll definitely be thanking you'll definitely be thanking your past self in the future. Yeah. A little bit of wisdom there, huh? Yeah. So, another good thing, the trade tensions with China eased. That's what they're telling us. Who knows if that's true, but the markets liked it. That was another reason why the markets went up. Good for me and you, right? Because we have assets. So that's a positive thing. Regional banks stabilize on liquidity concerns. So I guess there was some liquidity concerns in some of these smaller regional banks. I don't know, possible bank failures, but it seems like they got it under control. So it's a good thing. That was also another reason why the markets, did us pretty good today on this Friday. Like I said before, it was kind of a mixed bag. It's depending on what you were in, but overall, all the indexes did pretty solid today. So that's good. Interest rate cuts, they're coming. Interest rate cuts, what we're more likely to see is another 0.25%, 25 basis points interest rate cut. And that's probably what we're most likely going to see. Excuse me. That's probably most likely where we're going to see in the near future is a 25-point basis cuts. So, I mean, that's good for asset prices. I mean, 25 basis points is not a lot, but they add up because we just had another past 25 basis point cut. Then there's going to possibly be another one in the near future. So that's a total of 50 point basis cut. So they all add up. And what it's looking like, we're going to have 2 more this year likely. So that's really going to be really good for assets, bad for inflation. So it's a double-edged sword. I mean, but it's better to be in the markets and to be in assets to be in nothing at all, because at least you have something shielding you. If you have nothing, you're just getting eaten up alive by this inflation. So, being that said, that's why you're here watching me, because we have assets. Fed Chair Jerome Powell has basically flagged the hiring. I guess hiring slowing down. So that's another excuse for the interest rate cut. Slower hiring, weaker job data. So that's another reason why he's going to cut interest rates. So that's definitely promising we're going to get some interest rate cuts. So, also, and some Fed officials, they're kind of like pedaling back, like, hold on, wait. We don't know if we want to do these interest rates so aggressively. That's going to just cause stronger inflation, and prices of things are going to go up, of goods and services, and people are really going to be hurting. So there's some Fed chairs that are, part of the Federal Reserve that are kind of against the aggressive rate cuts. So, I mean, we'll see. Some of them don't even think we should do rate cuts. Some of them think we should just, stay where we are. I mean, I don't know. What do you guys think? I mean, because when we do cut rates, inflation is going to skyrocket. Things are already expensive as it is right now. It's just going to make things more expensive. We got tariffs. Inflation's not going to make it any better. So, I don't know. But if you have assets like us, it'll make things a little easier. So, so the likely scenario is one more cut at 0.25% by the end of the year. 2 cuts of 0.25 is basically moderate to high chance. Aggressive cuts meaning 0.50% in 1 meeting, or 3 cuts. 3 cuts, us getting 3 interest rate cuts it's a little bit of a lower chance, but it's possible. But that'd be crazy if we did. Stock market assets will go crazy. Build more wealth. That's what I say, you guys. Stay in the markets, stay in assets. Always be buying. ABB, always be buying. It's the #1 rule. Always be buying. And then they're saying there is a possibility of no cuts, of having a pause. I don't know. So any of this is possible, but I think that we're leaning towards rate cuts since, Federal Jerome Powell said what he said about the job market and everything going with that with the weak labor market. So I think that we're leaning more towards rate cuts. Economists and market watchers are leaning to 2 more rate cuts between October and December. So when the rate cuts come, it's most likely going to be between October and December, towards the end of the year. So towards the holiday season, that's when we're going to see the rate cuts. So yeah, that might be a good time to cut rates. People get to borrow cheap money around the holiday times. You're gonna see a lot more borrowing for Christmas gifts, Thanksgiving, New Year's, people going to their New Year's destination. There's gonna be a lot of spending at that time. And that's why I was talking about Klarna. I think Klarna is gonna be part of all that. The buy now, pay later plans, like I said before. So yeah, guys, so definitely set your guys' self up for, for success. Keep buying assets, any asset, gold, silver, stocks, property, maybe even crypto. I don't know how you guys feel about crypto. I mean, I own it, but I'm kind of, because it's kind of like, it's backed by nothing. There's no company behind it, and it's not a hard asset. I'm not saying that I don't like it, but I'm a little more speculative when it does come to crypto. That's all I'm saying. So, make sure you guys get assets, because the 1%, they want us to stay broke. They don't want us to buy assets. They want us to be in debt. They want us to keep spending. They don't want us to invest in the stock market. But we need to, because there's a lot of people that don't invest in the stock market. Most people don't participate in the stock market. Like my dear buddy Richard Vane always says, there's a boom economy and there's a bust economy. So you got to make sure you participate, because most people do not participate in the stock market. So, and that's why I make these videos, just to make people aware. And, I'm no financial advisor, but one thing I do know is that we need to be holding assets, and we don't need to be just in all cash. The dollar is rapidly declining. They're doing a lot of money printing. So we need to be in other assets, such as gold and silver, or probably your #1 assets, to counter to the dollar, property, paper assets, big boy blue chip companies, your Mag 7, your Nvidias, your Amazons, your Teslas, your Palantirs, all those big boy blue chip, your Nike, Louis Vuitton, You know, your big boy blue chips, your companies that are not going to go anywhere, because most of those companies are just named off. I don't think they're going anywhere. Your Microsofts, your Alphabets. I mean, because if I believe if something happened to a lot of those companies I just named off, that would be the end of American civilization, because we our country basically runs off of Microsoft and what Alphabet, Amazon. Everybody uses Amazon. Amazon, I don't know how many things they own. They own Whole Foods now. What else are they gonna buy up? Jeff Bezos is a beast, boy. And he's trying to own the world. But that's another conversation. But I just want to come on here and rant a little bit. Yeah. So that's what's going on in the markets right now. Just make sure you keep buying assets. ABB, always be buying, participate. You know, buy. You know, do it for your family. You know, they'll thank you. You know, because times are pretty hard right now for a lot of people, and I think buying assets is one of the ways that we can get ahead. You know, with all this money printing and inflation, because we're going to be the ones suffering. You know, you got a lot of people bickering down here about politics and stuff like that. Like, look, we're all in this together. You know, we're all going to need each other's help at one point or another, and we might as well just all hold some assets, because you're not going to hear too many people on YouTube talking about hold assets. A lot of people are worrying about Bad Bunny in the Super Bowl and stuff like that. I mean, come on, like, we have no control over that. Let's take control of what we can in our life, instead of arguing about politics and what the president's doing, and rather if you agree with what he's doing or not. I mean, there's nothing you can do about it. So you might as well just get rich off the whole situation, you know? So, yeah, you guys. So stay in the markets, keep buying assets. Let's get that bag. And thank you for listening to me rant. Like, subscribe, share, comment, all those good things. And yeah, you guys have a blessed day.